The trend is your friend until it ends, and in today's video we're going to be taking that saying literally, going over the macro charts in extensive detail, discussing exactly why the charts are undoubtedly bullish and what would need to occur from a technical perspective for these charts to flip bearish. Alongside this, we are going to go into exclusive detail on the short-term price action, the total cryptocurrency market cap, the pre and post halving price action, and so much more. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we have so much to discuss. We're going over the short-term price action, the total cryptocurrency and total altcoin market cap. We're discussing why the macro charts are still undoubtedly bullish and exactly what would need to occur for that to change, as well as going over the pre and post halving price action from a historical perspective. So before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to this with over 600 members, you'll get access to our group chats, our general chat, our news, our trading chart education, our help, our daily video, and our trade setup chat. If you are interested in joining that, go ahead and contact me in the pinned comment of the free channel. For more information, you can also click these links. Let's go ahead, guys, and jump into the video. So like we said, we have so much to discuss. Let's start on the market data. The 24-hour volume has decreased by 12.79%, sitting at a total of 165 billion. 24-hour liquidations with a reduction in volume have also reduced 25.52%, sitting at 164 million. Of the 164 million in liquidations, 81 million have come from longs and 82 million have come from shorts, showing a very split 50-50 degree of indecision in the short-term price action and more or less people's actions and decisions within the last 24-hour period. In the last 24-hour period, we have seen Bitcoin bounce from our range low deviation, which we did tell you to watch for a bounce from. We saw a breakout of our short-term downtrend, which as well constituted the downtrending diagonal resistance of the falling wedge pattern as a result, again, of our bullish divergence developing into our area of support. We have seen buyers step back in, we have seen the price action push upwards, and we have seen the price reclaim or hit that $64,000 level. We'll discuss in much more detail today what this means and what we expect going forward based on these short-term developments. Moving over to the broader markets, the DXY again hasn't seen too much change. The last 24 hours was red for the DXY, again trying to hold above that 106 level. Failure to hold above 106 will result in something like this playing out, a correction to our 2-month-long uptrend, which we would not expect to retest and hold for a third time. We'll be looking for an extended correction down to 103. This will be a very bullish thing for the asset market, the risk asset market. If we are able to hold above 106, however, we are expecting continuations to 107 for now, watching how this develops over the next couple days. The broader markets are still in a short-term downward move, and again, not too unexpected and definitely not too concerning. It is natural and is perfectly healthy to see corrections on the higher time frame. It is good to reset the momentum, and it is good to reset buyers' emotions. We have seen a correction nearly down to our $5,000 level, and this level is $5,000 level is a key level of high time frame support. We are expecting a bounce to develop from around this level. Again, like we have been saying since up over here, Any correction that develops that takes us as low as 5,000 should still be considered a healthy high time frame correction, which would lead to an extended continuation at a later date. It is only if 5,000 is lost will we then expect a retest of our prior 2021 high. So overall, still macro bullish, short term quite red. Moving over to the Dow Jones, exactly the same premise over here. Again, short term correction. On the chart over here, we can see a retest of that 38 to 37.7 region. If we do lose this level, we are expecting an extended correction to retest that 2021 high. Until then, we are expecting bounces on the macro and continuations upwards, as this is deemed to be a healthy high time frame correction on our macro charts. Before we do get into Bitcoin, there is another thing I want to be discussing, which is a recent announcement from the Federal Reserve suggesting that they may wait until 2025 to lower interest rates. Now, a lot of people are thinking, well, this is ridiculously bearish. This is horrible news. In fact, it really isn't. If we take a look at what this specifically means, I did a little post about it, talked about it, how this could be short-term bearish, but as long as the overall narrative, which is driving the macro prices upwards, remains intact, that narrative is that we're moving towards a potential rate cut in a future period. The perceived systematic risk on the higher time frame is going to remain low as the market adjusts to future risk as it is future seeing. So provided that the narrative, which is we're moving towards a rate cut, remains intact, it is unlikely that this recent developments, recent news will have anything more than just a short-term impact. Now, if we start to see the probability of rate rises increase again, okay, that could shift the perceived systematic risk downwards, or should I say upwards, and thus result in short-term corrections in the market as it becomes more cautious and prepared for any bad announcements. But again, if the narrative remains intact, the price action will continue towards that direction of which the narrative is suggesting. Now, if we do hear news such as the Federal Reserve is no longer expecting an interest rate cut, that is very, very different news to the news we did get, and that would significantly drive up the perceived systematic risk, and the markets will heavily correct in anticipation of there no longer being an interest rate cut. So there's a big difference between the two. This, of course, is not ideal. We do want to see an interest rate cut sooner than later. That is going to be better for the markets. Asset prices will rise sooner than later. But at the end of the day, it doesn't really matter when it happens, as long as it is going to happen, and that is the current trajectory that we're moving on. And between now and when it happens, we do not see any more rate rises. So let's go ahead, guys, and jump over to Bitcoin. Before we do, a quick word from Bitget and BingX, and we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So like we said, we have a lot to discuss. We're going to be taking a look at the total cryptocurrency market cap. We're going to be taking a look at the total altcoin market cap. We're going to be discussing the macro charts and why, based on a multitude of different indicators, we are objectively still macro bullish, and exactly what we would need to see for that to flip bearish. Remember, the trend is your friend until it ends. So we're going to be taking a look at what would cause it to end. And now we're also going to be taking a look at the short-term price action, and as well the pre-halving and post-halving price action, which we'll take a look at on the macro chart as well. So let's go ahead and start on the short-term price action. As we can see, guys, within the last 24 hours, as a consequence of the buyers stepping in as support, which was reflective by our bullish divergence developing into our range of support, okay, we have seen a short-term rally in the price action. Now, it is important to note the short-term rally in the price action has developed a short-term reversal, which is taking us to retest 64,000. However, on the short-term chart, that push has not been strong enough to break above our 63.8 neckline of resistance, so we've actually created a short-term lower high. Now, this isn't ideal. We definitely do want to break above this region to continue upwards, and we'll be discussing that in just a moment. However, good progress on the short term. So let's take a look at that neckline of resistance, which you can see represented by this white line. We can also see above that white line, we have a nice divot in our VIPV, representing a gap in volatility in our visible range volume profile, meaning if we are able to break above this level of resistance and break into that $64,000 region again, we are expecting quite a swift move upwards to retest the midline of our current consolidation range, which is sitting at 66,000. This area is going to be an area of confluence between our downtrending diagonal resistance and the middle range of our horizontal higher time frame channel. Of course, if we are above the midline, we are bullish within the channel. If we are below the midline, we are bearish within the channel if we're taking a look at the zones of the channel. If we're looking at the trend, of course, we look at the current trends, not the zones. But if we look at the zones, we're going to be bullish zone above the midline and a bearish zone below the midline. All that means is while we are in the bearish zone, the possibility of a correction underneath the range low still persists. And when we are in the bullish zone, the possibility for a breakout above the range high persists at a greater probability than a breakdown. So it just shifts the probabilities in terms of where we could likely break in terms of the range highs and lows. If we are looking at the short-term price action from a structural perspective, of course, we can take a measured move from point 1 to point 2 of the channel. We can then apply this to the breakout point, and we can see the measured move of the breakout of the falling wedge could take us as high as around $71,000, which will reach that prior neckline of resistance. Again, measure moves are not exact targets. They simply represent a range of which the price action can move within after a breakout of a consolidation range based on the depth of the prior consolidation. Of course, our logical targets are going to be areas of actual resistance. Again, looking at 66, our downtrending diagonal, and our $71,000 region. So all in all, guys, the short term is looking good. And like we've said this entire time, while support is support, the probabilities of a continuation upwards far exceed the probabilities of a breakdown. If we do get that breakdown, only then are we then expecting a correction to 57 to 58,000, again, as per our VRPV, and potentially 52,000 as per, again, this prior range of horizontal consolidation, a major area of support. For a breakdown to be validated, like we said in yesterday's video, we need to see a 4-hour close underneath our sell side liquidity. Until then, expecting reversals back up to the range high. Looking at the higher time frame structure, again, for a macro continuation upwards, we would need to break above our deviation high, which is sitting just under 74,000, as we can see, macro continuation above. Until then, we are moving sideways in a higher time frame region of consolidation. You're probably thinking, this isn't a consolidation range. It is 110% absolutely a consolidation range. For a consolidation range to be identified, we need to see a range of price action that is moving sideways, which we do have, tick. We need to see a range of price action where volume and momentum are decreasing, tick. So we definitely have a consolidation range as our range highs and range lows are respected. It is a large consolidation range, but as we said in yesterday's video, the larger the consolidation, the more reactive the movement. So with these large consolidation ranges, we generally see large movements come out of these ranges, whether it be a break upwards and a strong explosion in price upwards, or a break downwards and a equally strong correction toward the downside. At the moment, like I've been saying this entire time, I'm still expecting that continuation toward the upside. That is it on the short term, guys. Those are the things I'm watching. To go over it really simply once again, on the short term time frame for a continuation to continue, we need to see a break of this resistance level. We break above that resistance, we are looking for the dotted trend line, we are looking for the downtrending trend line, and then if that is able to break, we are looking for 71,000. Until then, until these levels break, there is a chance we continue back to retest that zone of liquidity again. I would not like to see a retest of this level, provided now we have made a lower high on the 4-hour chart. that would be a sign of a failure or exhaustion to continue higher, which would increase then the likelihood of a breakdown from 60. So it is looking good, but it is not looking great just yet. Let's go ahead now and take a look at the higher time frame charts, talking about the total altcoin market cap. So the total altcoin market cap is looking great. It is looking really good. And to keep it really simple, guys, to keep it exceptionally simple, we're going to take a few lines. Number one, this is going to be our first zone. This is our zone of our dead cat bounce high of the price cycle. Above this level, okay, this level and above, we are macro bullish and we are expecting a continuation into the eventual parabolic continuation for Bitcoin. Okay, above this line, we are going to be in our Bitcoin bull market. And below this line, we are macro bearish continuing down. If we were to see a breakdown of this level and a continuation into our next zone, that will be an indication of massive high time frame weakness, okay? That would be a massive warning sign for a potential extended correction for Bitcoin, which would absolutely decimate altcoins. So we do not want to see this level break for the health of the high time frame charts, but while this level is able to hold, the expectation is a continuation higher. Let's take a look at altcoins now. So altcoins are doing something very similar to what we have seen in the past, exceptionally similar to what we have seen in the past. We have a pattern over here. This is going to be our 6-point pattern. You've probably seen this pop out a fair bit now, as a couple people have been looking at this chart, but this is a 6-point chart we have identified. We have got our point 1, which is going to be the dead cat bounce high, okay, the dead cat bounce high after 0.6, which is the top of the prior cycle. That is our dead cat point bounce high. That level actually makes a yearly level of resistance represented by the black trend line, which ends up being the trigger point for a parabolic rally for point number 5, meaning when we break above that trend line again at point number 1, we enter the parabolic phase for altcoins. Moving downward, we have point number 2. Point number 2 is the bear market low accumulation range of resistance, meaning below point number 2, we are in this bear market. When we break above point number 2, altcoins officially enter a bull market. We have been in a bull market for quite some time. Point number 3 is the small weekly range of consolidation above the resistance line at point number 2. Point number 4 is the initiation of the bull market moving into point number 1, which we can see we are in at the moment. Of course, point number 5 being the parabolic phase and point number 6 being the expected high for altcoins. The most important thing is if we look at the point number 4 and point number 4, we are seeing a very similar scenario. We are seeing that correction develop, okay, prior to the breakout of point number 1. And if we look at when that correction is actually developing, we can see it is developing around the time Bitcoin retests that prior all-time high. So looking at the prior cycle 2, around the same time Bitcoin retests that prior all-time high, we see the altcoin market cap at that point number 4 rejecting and seeing that healthy retracement. Now, what would break this pattern? Number 1, the one thing that would break this pattern is going to be, from a structural perspective, a breakdown of number 2. If we broke back under number 2, that would invalidate the pattern and signify the altcoin cycle is over. From a technical perspective, however, if we were to break underneath the low short EMA on the weekly chart, that would indicate significant weakness and could be resulting in an extended correction downwards for altcoins. The low short EMA is the green line, which we are sitting above. Provided we sit above that, we expect a continuation upwards, so looking overall pretty healthy. Let's go ahead now and take a look at the macro charts, guys. So moving over to the macro, we have got the halving event coming up in 24 hours. In fact, let's take a look. This might be a little bit slow. I think it's about literally like 1 day. I think it's pretty much like 1 day from now until the halving event. So like just over 1 day, 1 day and 30 minutes. Super, super close, okay? If we look at historical price action, we generally don't see all that much reaction from the halving. Let's go ahead and take some of those indicators off. We saw after the halving, pretty much no price action, sideways consolidation, okay? If we look at the prior cycle, again, we saw a bit of downtrend after the halving, pretty much no price action. If we look at the prior cycle, again, after the halving, pretty much no price action, we went sideways. Now, will this time be any different? No one can say for sure. However, In this cycle, we have got a lot more media attention, we have got more public attention, we have much more money and much more market participants, and I feel like this halving event is more anticipated. With widely anticipated events, we see emotion. With emotion, we see volatility. With volatility, we see, of course, a lot of volume and a lot of price action. So we could, this time around, actually see the halving event be a reactive event. Usually it's a non-event. We could see it be a reactive event, meaning we could see a degree of price volatility as a consequence of the halving day. Something to keep your mind on. Now, historically, the most important thing is, if we look at the price action post-halving, so from the dotted trend line onward, we never see, okay, that breakdown of that trend line on the short low EMA again. The short low EMA is going to be that green trend line. We do not close a weekly candle underneath that level again. So we do close a weekly candle underneath the short low moving average. That would indicate the potential top has been in for Bitcoin and we could be entering a bear market. As if we look at prior cycles, the only time we close underneath that short low EMA is after the top has been in. Right over here, look at the prior cycle. The only time we close underneath it, again, we travel along it. Right over here, we close underneath it. So like that common saying is, the trend is your friend until it ends, and we should expect the trend to continue until we see the validations that the trend has ended. Another common one is going to be the super trend. We can see the super trend lines up pretty closely to those price cycle indicators. We are in the green. And again, while we remain in the green, we do expect the trend to continue upwards, and it is only when we break underneath the lower band of the super trend that the clouds turn red, the band turns red, and we enter that bear market phase. And we have not done that yet. So the market, again, the trend is your friend until it ends. It is an overall uptrend. We can look at another indicator, the Ichimoku cloud. What we have seen in the past is when the lower band, okay, of the prior cycle moves into the Ichimoku clouds, that is what triggers that entrance into that parabolic phase for Bitcoin and continuation upwards. We can see we've entered into the clouds. That should trigger the parabolic phase for Bitcoin and continuation upwards, as that is what we have seen in the prior cycles. The entrance into the clouds, we see that continuation on the macro upwards. So from a technical perspective, from a structural perspective, the markets are still macro bullish. Now, it is important to note, the charts do not determine where the price goes. The buyers and sellers determine where the price goes. So if you want to look about where the price is going to go, you have to think about what can change buyers and sellers' decisions to buy or sell. And one of the main one is going to be those economic drivers, particularly the interest rates. So it is something I am very, very much watching closely to see how that narrative develops. If we do develop into a narrative such as we are not going to see interest rate cuts, or we are going to see a few more interest rate rises prior to a cut, either one of those scenarios would result in the potential damage of the macro trend and the prices for Bitcoin, for the stock market. We're all correct, okay? We have to keep that in mind. So thank you for watching. Have a fantastic day. Catch you in the next video on Sunday after the halving. See you then. Bye.